They said it would never happen, that no machine could match the instincts of a seasoned trader. The gut feeling honed over decades on the trading floor. The subtle sense of market rhythm. The intuition that separates winners from the crowd. But today, that belief has shattered. Because a new generation of AI trading models isn't just matching humans. It's beating them. Consistently, relentlessly, and quietly rewriting what it means to have an edge in global markets. This isn't some sci-fi fantasy. It's happening right now in real portfolios across Wall Street, London, Singapore, and Hong Kong. These models don't sleep, don't feel fear, and don't second-guess their own logic. They digest more data in a second than any analyst can in a lifetime. And their rise is forcing the financial world to confront a single, uncomfortable question. What happens when human traders are no longer the smartest players in the room? Let's start with where this revolution began. Not in hedge funds or investment banks, but in research labs. Years ago, AI researchers began training reinforcement learning systems on market data, teaching algorithms to simulate millions of trades, testing strategies, adapting, evolving. And like an athlete in a perpetual training camp, the AI learned from every loss, every wrong assumption, every tick of the market. Then came deep learning, the game changer. Neural networks that could recognize price patterns the human eye would never detect. Correlations hidden in noise. Momentum shifts invisible on traditional charts. These models began anticipating not just price moves, but behavior. The psychology of other traders. They learned that the market isn't just numbers. It's emotion quantified. Fast forward to now. Firms like Renaissance Technologies, Two Sigma, and Citadel are already driven by data science. But the latest generation of AI funds takes it a step further. They don't use human-crafted rules at all. They create their own. Through self-optimizing algorithms, they evolve strategies live in real time, without direct human instruction. Take Q-learning models trained on futures data. They explore millions of what-if scenarios across thousands of assets, learning which strategies maximize long-term reward under uncertainty. Or transformer-based models that ingest news headlines, central bank speeches, and sentiment from social media, then map that data directly to volatility and market bias. It's like GPT, but for trading. And the results? Some of these systems are now outperforming human fund managers by double digits. A 2025 MIT study found that AI-driven funds delivered 14% higher annualized returns than discretionary traders, while experiencing 30% lower drawdowns. They trade smaller, smarter, faster. They don't panic in a crash, and they don't chase in a rally. They simply execute the math. But the real revolution isn't in hedge funds. It's in accessibility. Because what started as a billion-dollar arms race is now available to anyone with an API key and an idea. Retail traders are plugging ChatGPT-powered assistants into TradingView and MetaTrader, automating their systems, testing thousands of parameter combinations overnight. AI backtesting tools can now simulate decades of historical data in seconds. And with just a few lines of code, a trader can deploy an adaptive strategy that learns as markets change. Imagine a system that detects shifting correlations between currencies, commodities, and equities, adjusting leverage and exposure automatically before a crash hits. That's not future talk. That's 2025. AI trading bots are already analyzing global macro data, inflation trends, yield curves, risk sentiment, and reallocating capital dynamically. The irony? Many of these models don't even understand the market in human terms. They just learn the probabilities of cause and effect. They don't know what CPI or GDP means. They just know what usually happens when those numbers move. And in that ignorance lies their strength. No bias, no emotion, no narrative. Only data. Of course, the rise of AI in trading also raises an existential threat for human professionals. What happens when algorithms dominate every time frame? When all the patterns have been arbitraged away? When the edge no longer lies in analysis, but in computation itself? Some argue that humans will always have one advantage: intuition. The ability to interpret black swan events. to sense the mood before it hits the data. But even that is fading. Large language models now track narrative tone across millions of articles, identifying early shifts in sentiment before markets price them in. They're quantifying what we used to call gut feel. And yet, humans still have a role. Because every AI needs a framework, a guiding philosophy. It can optimize, but it cannot decide what to optimize for. It can trade, but it cannot care. And in that gap between logic and intent, between pattern and purpose, lies the next frontier of trading, where humans and machines converge. The best traders of the next decade won't compete against AI. They'll collaborate with it. They'll use it to analyze regimes, generate probabilities, and manage risk with machine-level precision. The new edge will belong to those who know how to guide intelligence, not fight it. Already, hybrid strategies are emerging. Human-defined macro frameworks executed by AI precision, discretionary traders using neural forecasts to time entries, and funds where every decision is scored by both man and machine. It's no longer about being smarter than the model. It's about building the right partnership. Because in markets that move at the speed of algorithms, ego is expensive. Adaptation is everything. And the trader who refuses to evolve is already extinct. This is the era of cognitive trading, a fusion of human foresight and machine execution. Those who master it will command unprecedented power in the markets of tomorrow. Those who ignore it will be left behind, still fighting battles their machines already won. So, whether you're a day trader, fund manager, or an economist, the message is clear. AI isn't coming for your job. It's redefining it. And the traders who embrace that shift now will own the next decade of finance. If you found this deep dive into the future of trading insightful, hit that like button, share it with someone in your network. Drop your thoughts in the comments. And subscribe for more groundbreaking insights into the economics, psychology, and technology shaping tomorrow's markets. Because the next transformation is already trading ahead of you.